CNBC TV 18, celebrating 15 years of leadership.
Our top story in India Business Hour, the bulls break shackles on the Dalal Street. Major indices hit record highs. Sensex rallies over 500 points. It nears 29,000. Nifty flirts with 8,700, gaining over 140 points. The Jan Dhan Yojana is a big success, and over 99% of households now have a bank account, claims the government. The direct benefit transfer scheme now covers 300 districts, and over 25,000 crore rupees of LPG subsidy will be transferred directly to bank accounts.
FRBM target, I think, is 3.6% or something of GDP. So we have projected the GDP on the basis of what is the likely, nominal rate
Shift
of
to cash payments for all subsidies, says the chairman of the Expenditure Management Commission, Dalal. Also asked the centre to stick to the 3.6% fiscal deficit target for the upcoming budget, keeping the FRBM roadmap unchanged. The IMF raises a red flag on global growth, but predicts that India will grow faster than China in 2016. Meanwhile, the World Bank calls on India to target subsidies better and pledges a minimum of $1 billion to the Prime Minister's Clean India campaign. Twitter makes its first acquisition in India, buys mobile marketing startup ZipDial. The deal is likely to be in the region of $30 million. After a rap from the president over ordinances, the government gets into a huddle to chart out its strategy for the budget session. Sources say the session could begin on the 23rd of February. High drama outside the BJP office in New Delhi. Supporters of state BJP chief Satish Upadhyay protest after he refuses to contest in the elections. Meanwhile, Arvind Kejriwal dares Kiran Bedi and Ajay Markin to a live television debate. Markin accepts, Bedi deflects.
The 45th annual meeting of the World Economic Forum kicks off in this picturesque town. And guys, while I'm at it, let me tell you, this is CNBC TV 18's 11th year here in Davos. Only on CNBC TV 18.
The World Economic Forum all set to kick off in Davos. We have Menka Doshi joining us live from there. Menka, you tweeted earlier that it's minus 9 degrees Celsius over there. How are you holding up?
Oh, well, just about barely, Nayantara. It's a very cold day, and it does seem that the mood here, despite the runaway rally we've seen in equities back home in India, the mood here is going to be one of caution, as there's no dearth of the many economic challenges facing the global economy in 2015. We're going to talk about them with our special guest, Nobel laureate Edmund Phelps, and IHS chief economist Nariman Behravesh in just a few minutes on the show. Right now, I'm going to hand it back right to you.
And Menka, like you said, we're going to come back to you in just a bit for all of this burning issue. But first up, onto the record-breaking day at the Dalal Street. Bulls went on a rampage right from the word go. Major indices hit record highs in trade. First, let's tell you about the Sensex. That rallied over 500 points in trade, touching a new high of 28,829. The index finally went home just a tad shy of that level. Onto the Nifty, that gained nearly 150 points. It flirted briefly with 8,700, but finally closed for the day at 8,695. Mid-cap index, that also hit record high, and I may add for the second straight day. However, today the mid-caps did underperform the blue chips. Anuj Singhal, as always, joining us to wrap up today's trading action. Anuj, literally a bolt from the blue. What sparked this bumper rally?
Well, it came out of nowhere, really. The market was at the cusp of all-time high, and it was only a matter of when and not if the market would hit all-time high, and that's what happened today. In post-noon trade, the Nifty hit all-time high. At that point, the Sensex was still 300 points from all-time high, but then we had a late push and a big rally with 500-point Sensex rally that led to Sensex also hitting all-time highs. Today was a blue chip driven day, really. There was a lot of talk of basket buying in the market. Global markets were also stable. There was risk on that was playing out, but clearly it was all about big blue chips in today's trade. And the mid caps underperformed, but they have been outperforming so far. So maybe today was reserved for the large caps. Let's talk about the stocks. These three stocks, in fact, contributed to over 40% of Nifty's rally. HDFC, that was up 6%. That really was a stunning move to a new all-time high. ITC was up 3.5%. ICICI up about 2%. Then you go on, you have stocks like Reliance, Tata Motors, Axis Bank. All of these up anywhere between 3 to 4%. Then you had a couple of other stocks like Infosys and Bharti. They were also higher in trade today. HDFC Bank as well. So across the board, blue chips were gaining ground in today's trade. But today was a bit of global risk on as well. Metal stocks also did well in trade today. Stocks like Sesa Sterlite, Tata Steel, Hindalco, in fact, in percentage terms, had big gains in today's trade. On the losing side, not too many names. GAIL saw a bit of profit booking. That stock was down about 2% after yesterday's big surge. Tata Power and Dr. Reddy's were other prominent names. And in the mid-cap space, we had both winners and losers. So, stocks like South Indian Bank, that reacted to numbers. That was down quite a bit. Kesoram was locked on circuit, and Bombay Dyeing was up about 8%. So the sense you get is that really a big pre-budget rally is on, and at this point in time, you just got to respect the screen and not put any numbers on where the Sensex or Nifty could go.
Well, if we compare the Indian market so far this year, we're up, as you well know, just over 4%. So that actually makes India, one of the better performing markets worldwide. India clearly is one of the major beneficiaries from the decline in oil prices. This is going to be a boost to growth. I think investors are much more positive on the growth outlook for India now. And generally forecasters are upgrading their outlook for GDP growth this year to well above 6%.
I think the market is still, in a new zone, if you will, because of the new lifetime highs that it is making every other month, which is a great news. But I think what I do not want to take away in terms of my assessment is the fact that while we are making higher bottoms and higher tops, in a manner of speaking, if a technical analyst were to look at it, I think he will be looking at 8,800 as indeed a very important resistance level.
We are in a new bull market. It's just that in the immediate short term, I was a tad bearish a few days back, and that's why I'm caught on the wrong foot. Problems haven't gone away. Fundamentals and earnings and numbers and balance sheet issues, domestic companies haven't gone away. It will take time to set right. But I feel the prices and the indices obviously have run up ahead of the fundamentals. But, that's what bull markets are all about. You can't really game the last T, or you can't game the last 100, 200 points.
All right, markets at record highs. The other big story this evening, 100% financial inclusion is almost a reality, as over 99% of India's households now have a bank account. That was the message delivered by a triumphant finance minister as he labelled the Jan Dhan Yojana a big success. Arun Jaitley claimed that banks have opened over 11 crore bank accounts. That's much higher than the government's initial target of just about 7.5 crore accounts by 2016.
पहले कल्पना ये थी कि 26 जनवरी तक 7.5 करोड़ बैंक अकाउंट होल्डर्स तक हम लोग पहुंचे। ये एक अनप्रेसिडेंटेड इनिशिएटिव था, जिसमें 25 करोड़ परिवार हाउस होल्ड्स में से 21.8 करोड़ हाउस होल्ड्स तक एम्प्लॉयज फिजिकली गए।
Well, the Financial Services Secretary has said that the direct benefit transfer scheme has been extended to over 300 districts, and it now covers over 3 crore beneficiaries. He also said that over 25,000 crore rupees worth of LPG subsidy will now be directly transferred to bank accounts to plug leakages. However, there's no plan as of now to transfer food subsidy through the direct benefit transfer scheme.
अगर शुरू से देखा जाए जो LPG का, तो 2013 में 20 डिस्ट्रिक्ट में शुरू किया था LPG का जो है, उसमें कुल मिला के 6,688 करोड़ रुपया जा चुका है इतने टाइम में। और एलपीजी का सब्सिडी इवन एट द रिड्यूस लेवल ऑफ सब्सिडी नाउ वुड बी कमिंग टू समथिंग लाइक 25,000 to 30,000 crore per annum, which will entirely flow through the bank accounts of beneficiaries.
The government saying that Pradhan Mantri Jan Dhan Yojana has been a big success, and anyway, since the 1st of January, subsidies for LPG cylinders are being transferred directly to bank accounts. Just yesterday, Finance Minister Arun Jaitley asserted the government would rationalize all subsidies. Today, the chairman of the Expenditure Management Commission, Bimal Jalan, has made a strong pitch for the direct benefit scheme to be used for all subsidies. Speaking to CNBC TV 18, Bimal Jalan said the government is likely to take up some of the suggestions that he has made in the upcoming budget. Listen in.
Subsidy per se are not bad, but we have a very large number of subsidies, right, and which need to be made sort of more, what is the word I should use, more specific to a certain task. Like, for example, education, primary education. I mean, you need one scheme, irrespective where it is and so on. But over a period of time, what has happened is that we have nearly 1,000 schemes.
That's right. You're talking about the centrally sponsored schemes, I suppose. There are over 1,000 of them. In fact,
no, and state schemes, but they have the same focus.
Yeah,
or rather, they want to do the same thing.
In fact, the finance ministry has also started a kind of nationalization of these schemes.
So they hold, earlier also, this has been done. So the task that we are going to look at is not that you should subsidize this or that or not that, but whether subsidies system can be made more rational in terms of combination of goals.
Right.
And whether cash can be used much more than goods. For food, of course, it has to be food, But there are a large number of subsidies where we don't have to have a system of reimbursement. We can directly transfer after the expenditure has been done, and so on and so forth.
And Bimal Jalan also said that his panel has asked the finance minister to stick to the 3.6% fiscal deficit target for FY16. The panel has also stuck to the tried and tested current FRBM roadmap for the next financial year.
FRBM target, I think, is 3.6% or something of GDP. So we have projected the GDP on the basis of what is the likely nominal rate of growth, GDP in nominal terms,
yes, sir,
and based on actual growth rate expected for next year, and what the inflation expectation is for the next year. And these are based on the economic survey of the government of India. There is no new or roadmap as such that we have gone by whatever is the agreed, or this maybe is changed, but to project. So projection of expenditure, GDP, for next year, 2015-16, based on the FRBM target.
Right.
And then we have calculated that to meet that FRBM target, the FRBM target for next year, as you know, is lower than this year.
That's right, sir.
And but GDP will be higher. So the expenditure cut required, in terms of management, by the way, not in terms of policy, would be X or whatever it is, and what can be done to reach that target.
All right, moving on. The stage is all set for the World Economic Forum in Davos, the yearly congregation of the world's richest and most influential people. It will perhaps see 40 heads of state and over 1,500 business leaders this year. Finance Minister Arun Jaitley will lead the India delegation. We have Menika Doshi now back with us, and of course she is covering all that action live from Davos. Menika, the theme this year is the new global context, and there's just so much happening. From these massive central bank moves to historic lows for oil prices. What can we expect from this year's gathering?
Well, Surbhi, it is going to be a mood of caution here. It already is on the eve of the WEF's 45th annual meeting, which, as you know, kicks off tomorrow, which is Wednesday. Most global business leaders here are expecting 2015 to be a year fraught with challenges, whether it is the challenges faced by deflationary pressures in the Eurozone or what's going on in Japan, whether it's currency volatility, as we saw that play out with the Swiss National Bank last week, divergent monetary policy, the Fed potentially tightening towards the second half of this year, the ECB and the BOJ continuing to further ease their monetary policies, lackluster growth coming in from China, and India may be one of the few shining spots from across the world. Now, these are the challenges that I put to my two expert guests that I spoke to today, Nobel laureate Edmund Phelps and IHS chief economist Nariman Behrovich. I asked them to list for me what they thought were the most critical challenges facing the global economy in 2015 2015 and whether monetary and fiscal policies will be enough to overcome them. Listen in to what they had to say.
For me, the greatest challenge is Europe, and I shouldn't have forgotten Russia. Russia, of course, is another scary factor in the equation. But I look to China to be stable and continuing to grow at a very moderate rate until it solves some of its until it gets over some of its structural hurdles. After that, it may pick up again. So I don't think that the global economy is in all that bad shape on the whole. I think the main problems are in Europe and Russia.
Would you say we're finally out of the woods?
Well,
given the backdrop
we're
of the
deep
global...
in the woods right now and hoping we won't go deeper. But I think if Europe can pull itself together, and I think that's a possibility, we can all reasonably hope for that, then, and if Russia will see the wisdom of behaving better in the world and in the global marketplace, then that would also help to pick up things.
I want to know if monetary policy action in Europe, the ECB is expected to announce a quantitative easing program this week.
Yeah.
Can it fix Europe's problems?
We all hope it will do some good. But certainly it can't fix the underlying problems of weak business investment, which is very much tied to almost a very, very low level of indigenous innovation in Europe. So there's just no basis for high prosperity there. That high prosperity cannot be created by monetary policy alone. Monetary policy can only make sure that it doesn't get in the way.
Okay, I have one final question about India. How can India use what you've written to build a stronger economy? I spoke of the youthful demographic that we have.
Right.
And that's my question.
Yeah, that's right.
We have a new government.
I was going to interject before that it's not only young people who can be innovative.
I didn't mean it. But I said we have a combination of factors. A new government, young people, hopefully an economic recovery in India, and the fact that the rest of the world is not looking so good. So maybe we can sort of claim our spot in the sun.
Well, about India, I'm reminded, as I am so often, and as I wrote about extensively in my book, Mass Flourishing, I'm reminded of the American case. What I think produced such sensational innovation in America between, let's say, 1830 and 1940, and to some lesser extent afterwards, was that everybody was involved in innovating. Everybody was thinking about, is there some way we can make this device more cheaply, or is there some way we can improve on it, or is there some way of doing this that's radically different that would be better? I think there was a spirit of inquiry, of experimentation, a spirit of trying to imagine new possibilities, a spirit of exercising creativity. I think to some extent that could happen in India too.
Let me start first by asking you what you expect the ECB will do this week, and will it be effective in helping Europe fight the deflation problem?
Our best guess is the ECB will launch about a 500 billion euro bond buying program. That's good, but it's not enough. I think in the end the ECB will have to do much more than that, but it's a good start, so it will help. So from that perspective, I think a good first step is the way to describe it.
Okay. Will it help Europe fight deflation?
I think it will help.
So will they have to do multiple sort of versions of this?
Our guess is they'll at least have to do another round a little later in the year to really sort of make sure and guarantee that we don't slip back into deflation. But it's a start. It's a good start is the way to say it, assuming they do it, of course.
Okay. What will that mean for currency volatility across the world?
Well, it certainly will mean a weaker euro and correspondingly a stronger dollar. So I think that's in the cards. And I think there's certainly a distinct possibility that we could see parity between the euro and the dollar sometime in the next few months. So we're headed in that direction, so it's entirely possible.
What does it mean for both the economies? What does it mean for countries like India that do trade with Europe as well as with the U.S.?
Well, I think, in terms of the U.S. dollar, it will certainly hurt exports a little bit, but the good news is the U.S. can afford that. It's growing strongly, so a stronger dollar is not going to hurt very much. But this is a lifeline for Europe. I mean, a weak euro is desperately what Europe needs. So in that sense, it's a good way to sort of rebalance growth a little bit from the U.S. to Europe.
Okay. And the central bank divergence, what do you make in terms of the impact that will have?
Well, again, it's the logical impact it will have is a stronger dollar, weaker euro, weaker yen, and in the case of India, certainly, assuming this recent cut that we had is the first of many, it'll probably be in a slightly weaker rupee as well.
Do you think India looks in a better position at the beginning of 2015 than it has in the last few years?
We're very optimistic about India. We think it'll grow probably 6.5% this fiscal year, and I think it's set to grow probably a little faster than that in subsequent years. We're in this ironic situation in the next few years. You could actually see faster growth in India than in China.
Just one of the many influential voices there right now from Davos. Now, India all set to become the world's fastest growing major economy by next year. That's the prediction by the International Monetary Fund. And this comes just days after the World Bank made a similar prediction last week. The IMF's latest World Economic Outlook update expects India to grow by 6.5% in the fiscal year of 2017. This is above China's growth projection of 6.3%. A few days back, the World Bank had predicted that India would grow by 7% in 2016, a tad higher than China's estimate of 6.9%. The IMF, like the World Bank, also not optimistic on global growth for 2015. It has cut its projection to 3.5% from the one it made in October of 3.8%. Sylvie.
All right, well, the World Bank, meanwhile, will continue to invest in $5 to $6 billion in India each year, and it will also partner with the government to improve sanitation, nutrition, education, and climate change programs in the country. In an exclusive interaction with CNBC TV 18's Malvika Jain, the bank's country director in India, Honor Rule, said that the bank will invest over $1 billion to implement Prime Minister Modi's pet project, the Swachh Bharat Mission. Take a look.
We project after the World Bank chief, Jim Kim, highlighted the opportunities that India can offer during the vibrant Gujarat summit, the India head of the international lender told CNBC TV 18 that the institution is working closely with the Modi government to support its initiatives in the areas of sanitation, healthcare, education and urbanization, amongst others.
We are working with the government on a specific program where we would support the Swachh Bharat program in the low-income states in India, well-known group of states, where the challenge is the biggest, using our existing program in rural water supply, but shifting focus to rural sanitation and rolling it out to all these states, and helping in particular with monitoring and evaluation, making sure that we don't just build toilets, but make sure that we build incentives for people to use toilets, and that the system actually is results-based.
Is there an amount that you can commit or something? What kind of corpus can we expect from the World Bank?
I think given the fact that we haven't fully completed our discussion, I wouldn't want to commit to an amount, but it will obviously be like no less than $1 billion, right? So a significant amount.
So going forward, in light of the report that you launched today, what would be the priority areas that you'd identify for the government, keeping subsidies in mind, and how do you think the government should approach this tricky topic?
Deal with inequality and people escaping poverty is not just about subsidies. Subsidies do play a role. It's significantly about opportunity, and I think that's where the report has some really important insights, quite positive, but insights that can be leveraged further. So I think reviewing subsidies to make them more effective is a great thing, to make them more targeted is a great thing, and then against the background that the real challenge on top of that is to make sure that people actually have the opportunity to become productive citizens, get jobs and escape poverty and have opportunity.
According to a World Bank study, government must focus on development of cities to facilitate overall economic growth.
Health comes up as one of the areas where inequalities are high and increasing, and so how to go to forms of universal health insurance, of coverage of the poor, is extremely important. In education, while there has been enormous progress on the primary level, secondary, the education of girls in particular, and quality of education are priorities, so I think these two I will certainly highlight. On the mobility aspect, I will say cities, no doubt. The urbanization agenda, cities are good, and cities can be a driver of more mobility and therefore less inequality over the lifetime, but also jobs. And I think the Make in India, the drive to have jobs and especially wage employment is a very important driver of mobility. It's a ticket into the middle class. And finally, on support, this rationalization of the mechanisms of intervention, this better targeting, this minimizing leakage, but still being very active in supporting the poor. Yes, these will be my 5 items in the list.
The government is also working with the World Bank's Doing Business and Climate Change teams to ensure sustainable business development in the country. In New Delhi, Malvika Jain.
And even all those billions of dollars that the World Bank is looking to pledge may not be enough to fund the Swachh Bharat drive. So the government is looking at alternate sources of revenue. Your mobile and internet bills could go up soon. PTI quoting sources reports the government may levy a cess on services provided by telecom operators to fund the Clean India campaign. PTI going on to say initially the government actually wanted to levy this cess on telecom spectrum, but the Attorney General Mukul Rohatgi said instead amend the Finance Act and levy the cess on telecom
I'm
services.
just counting education, maybe healthcare, and then of course the Swachh Bharat cess. On that note, it's a wrap on this edition of India Business Hour. Thank you so much for being with us tonight.